What's up guys, and welcome back to the channel. And if you caught the last video on setting up your wallet and navigating decentralized exchanges, that means you already heard of the game. Well, a lot of people are going to tell you hold to the end, buy this 100x, take a risk. Well, they're all wrong. And today I'm going to be showing you the strategies you can use to take profits. Well, in our last video, we talked a little bit about taking profit and what separates a good trader from a gambler. Well, today we're going to go more in depth into that. Well, one of the most fundamental strategies is to set a clear profit target. Yeah, of course, you need to set a take profits to know when you to leave the trade, how much I'm going to take and how much am I going to keep for myself. Before you even enter into a trade, you need to decide at what price points do you want to take profits. For example, initial target, sell 50% of your holding once the coin value doubles. This ensures you secure your original investment. And of course, you always want to secure the capital you actually put into your coins and the capital you actually use to your investment. If you lose everything altogether. The secondary target you should consider is selling another 30% if the coin's value triples. This also ensures that you gain the most, you capitalize, but you still hold on just in case the coin goes higher. And the final target, hold the remaining 20% for potential long-term gains. You have already made a lot of money, so it actually makes sense to keep a little bit on hold just in case the coin keeps coming. But overall, maintain the capital. Always take out your capital, guys. You got to take out your capital. And also, the coin doubles, you take out 50% of what you have to actually earn. And if it actually triples, take out 20%. Well, a big trend in the crypto space is diamond hands, aka holding a coin and never sell it. Well guys, this is stupid. People who do this are often devs, the guys that actually make the coins, had a pre-sale, or are even too rich to even care. You are never obligated to hold the coin forever. Secure your profits while trading and you increase your chances of actually winning on most of your trades. Just as taking profits is very important, another thing you need to understand is your exit strategy, and that's where trailing stops come in. What is a trailing stop? A trailing stop is a dynamic exit point that adjusts the coin's price as it increases. Here is how it works. Setting a trailing stop. Suppose you set a trailing stop at 20%. If a coin price rises, the trailing stop moves up with it. However, if the price drops by 20% from its peak, the trailing stop triggers a sell. This feature is available in a lot of DEX too, like DEX Screener, so you don't have to be constantly checking the charts just to sell at the right time. It actually literally takes care of everything for you. Now, let's say you've been trailing a bit and you've had a bit of cash. You actually saw a chance to invest into a coin. Like we said in the last video, do not put your entire portfolio into a single coin. Diversification is the key in trading. And the 50-30-20 rule is a straightforward way to allocate your investment. Now, what does that mean? Allocate half of your trading capital to high-risk, high-reward memecoins. These have the potential for significant gains, but come with high volatility. An example of a high-risk coin are things like Trump, or a coin that exists around the events that are called 30% meme-risk coins. Invest 30% of your meme coins with a steady growth potential at the most step foundation. Example, Pepe, Doge, and most of the coins you probably heard in the past. These coins still meme coins, but they have been around for a while and people will still buy them after all this time. Now the final one, the 20% stable investment. Keep 20% in more stable low-risk assets or stable coins. This acts as a safety net in case of any high-risk investments that don't perform as expected. Yes. We love making 100x's on a meme coin, but those profits should go into coins like ETC, Litecoin, XRP, and other coins that have the high purpose that just being a joke. This gets us to the first strategy. Assess your portfolio. The market changes, and that applies in the field where you can trade anything. If you have crypto investments like we talked about a minute ago, you should try to look at their performance at least once a month. See how they are doing, sell or buy more depending on how you find it. Monthly reviews. Set aside time each month to review your investments. Look at the performance of each meme coin and adjust your profit targets based on the current market trends and new information. Lastly, maintaining emotional discipline is paramount. It's easy to get caught up with excitement or fear of the market. But sticking to the predefined strategies is what sets a successful trader from a gambler. Yes, that's true. You have to learn to control your emotion because it plays a big part in how actually the results of your trade. And of course, you want to win. So a big part of winning is controlling your emotions. First thing you need to consider when trading Memecoins or controlling your emotions is avoid FOMO. What is FOMO? Fear of missing out. Just because a Memecoin is rapidly increasing, the value doesn't mean that you need to jump in impulsively. Stick to your research and strategy. Often the people who actually make money on meme coins are the ones who got in on the plane before it took off. You don't make money by chasing the plane down the wrong way. The next thing we need to understand is indicators a meme coin is a scam with a bad developer. Good coins are hard to find, ones that are obviously scams. And how do you know that? Well, there are a few things you need to put into consideration when you're doing this. Anonymous or unverified developers. One of the biggest red flags is when a meme coin is backed by an unverified developer or an anonymous developer. Legitimate projects usually have transparency teams with verified credentials. Check if the developers have projects, who knows them, and what projects they've done in the past. To investigate any past projects and the team behind those past projects. A history of successful projects can indicate credibility. Community engagements. Developers who actively engage with their communities through Ask Me Anything, regular updates, and more trustworthy. Lack of a clear roadmap. A solid roadmap is essential for any crypto project. It outlines the project's goals, milestones, and the future developments. Detailed plans. Look for a comprehensive roadmap that details what the project aims to achieve in a short and a long term. You have to maintain a certain level of reality when you actually trade Memecoins. Overly ambitious or fake roadmaps can be a sign of poor planning. Regular updates. Check if the team is consistent, updating their roadmaps and meeting with their milestones. This shows commitment and progress. Sometimes projects just say, buy meme coins, be happy for the project goals. Novices won't notice this. They buy the hype and they wonder why their wallet is empty. You have to watch for every little thing. This can easily add up to being a bad project. Be wary of meme coins that make unrealistic promises or guaranteeing high returns with little to no risk. Too good to be true, you're probably right. If a project guarantees returns or exponential growth without solid reasoning, it is likely a dud. Lack of substance. Genuine projects focus on building value and utility rather than making extravagant promises. Some projects, even though they have no utility, are still big. Think about Pepe and Doge. They offer nothing, but their memes are so big and people are literally going to keep buying that no matter what. Poor community engagement. A strong community, an active community, is a good indicator of a legitimate project. Check if the project's social media channels are active and actually engaging with the community. Look for meaningful interactions rather than just promotional content. Developers who respond to community questions and concerns are more trustworthy. Community size and activity. A larger, active community can indicate genuine interest and support for the project. Often, people buy promos for a crypto project. If you hear a coin launch pop out of nowhere, it is likely paid for or is definitely gonna done. Smart contracts vulnerability. The next thing we're gonna discuss is celebrity coins and why they are bad. There was a massive scandal on Twitter a few weeks back due to the rock of the Hawk coin, the Hawk 2 girl's name coin. It was sniped and dumped as soon as people began buying. Really, think about it. Do you really think Haley Welch knows anything about meme coins? Someone probably approached her and told her she was gonna make a bunch of money and that all she used to do was to make a few videos for Twitter. Of course she's gonna do it. Same with the rest of them. None of them have any buy or hawkers. Just like Hawk, many celebrity-backed projects lack solid development team or a clear roadmap for future growth. Minimal progress. Without continuous development and innovation, the coin's value is likely to stagnate or decrease over time. No long-term vision. Projects that don't prioritize development and community engagement often fail to sustain interest and investments. Finally, let's tackle the crucial decisions when to sell all your link coins. Timing your exits can significantly impact your profitability and long-term success in trades. Set profit milestones. Just as we take profit strategies, Setting profit milestone helps you decide when to hold or sell. Partial profits. Decide to sell a portion of your holdings once a certain profit level is reached. For example, sell 50% at a 2x increase and hold the remaining 50% for potential gains. Full exit points. Determine at what points do you fully exit the position. This could be based on percentage gains, reaching a personal financial goal, or market conditions. Understanding and monitoring market sentiment is the key to making informed decisions when selling or holding a coin. The bulls versus the bearish trends. If the overall market sentiment is bullish, holding new coins might lead to further gains. Conversely, during a bearish trend, securing profits by selling can prevent losses. There is a bunch of tools to measure what the market sentiments are. Let's talk about some of the sentiment analysis tools. Utilize tools that analyze social media trends, news, and indicators to gauge the current market sentiment. Evaluate project developments. Staying up to date with the latest project developments can inform your decisions to sell or hold. Positive updates. Announcements of partnerships, new features, or increased adoption can be a reason to hold or even buy more. Negative news. If a project has a setback such as delays, security breach, or a loss of a team member, it might be time for you to sell. How do you use technical indicators to actually know when to buy or hold a coin? Well, I'm going to share with you some few examples. Technical analysis can provide valuable insight into optimal selling or holding points. Here are a few indicators you should consider when you trade. A relative strength index. RSI measures the speed and the change of price movements. An RSI above 70 indicates overbought conditions and is potentially a sell signal, while an RSI below 30 indicates an oversold condition and is potentially a time to buy. Another thing I like to use personally is what I call moving average convergence divergence, otherwise known as MACD. MACD helps to identify trend changes by comparing short-term and long-term moving averages. Crossovers can signal potential buy or sell opportunities. Support and resistance level. Identifying key support levels and resistance levels can help you determine at what point you should enter into a trade, at what point you should exit, and also at what point you should take profits. It can also help you know where the price may actually go to in future. Well, these are just some few things you can use when trading meme coins, cryptocurrencies, or any form of market assets that are out there. But of course, this video is talking about meme coin specific. Let's get this out of the way. These are trading indicators that work on trillion-dollar stocks. Crypto is different. Anyone can make a meme coin and list it, and no amount of technical analysis will save it. Anyone can dump. In conclusion, meme coins are risky. Do not take unnecessary risks. Set your stop losses, take your profit, sell when you have to sell, and do not hold until the end. The goal is to make consistent monthly profit. And of course, the goal of what we're trying to do in this channel is to build consistent traders and not gamblers. Well, on our next video, we're going to discuss how to make sure the wallet doesn't get hacked after you've made your Mech. If you like what you're learning in this video, feel free to drop a like and of course subscribe, and drop some comments in the comment sections to let us know what we should talk about in the next video. Thank you.